Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hope everybody had a very beautiful day. And in today's markets, guys, the consolidation continues across the markets. It is definitely a big battle between the bulls and the bears at the all-time highs. And considering the fact that the month of July is almost over and that usually the months of August and September are notoriously bearish for the markets, it'll be a case in point in determining, guys, whether or not we can maintain these all-time high levels or whether or not the weekly consolidation will continue for the foreseeable future. And in today's video, guys, we're going to try and make some light of those two scenarios. Now, in today's price action, guys, it was most likely dominated by earnings, right? We had very large earnings come out after the bell: Tesla, Alphabet, and Visa, just to name a few. So in today's video, guys, we're going to go over a few things together. Number one, we are going to cover those earnings reports for Google, Tesla, and Visa, respectively. Thereafter, we're going to take a look at our technical analysis rundown in terms of major market indexes. How do we stand? Who is in control? That is what we're going to determine when we go through this rundown right here. Thereafter, we're going to take a look at our big tech names and see whether or not the big tech names are at juicy enough price discounts to maybe start dollar cost averaging into them a little bit. And that's pretty much it for today's video, guys. So without further ado, let's get right into it. SPY down about 0.16%, QQQ down about 0.35%, but really it was broad market consolidation again, guys. A lot of timidness coming into big tech earnings, especially, right? As a whole, though, guys, very, very mixed market. You can see across the board, big tech was very mixed. Semiconductors not having the best day at all. Even financials to the downside, healthcare to the downside as well. Really nothing much was a bright point in the market, except for your industrials category, led majoritively to the upside by a lot of defense names, military defense names to be more specific. But all across the board, guys, fairly weak market today. Take a look at the one-day relative here. You can see how big that weakness was. Nothing really performing well at all, and the markets that did perform well were only up just a few basis points. However, to the downside, utilities and energy taking a big slump, once again due to oil prices coming down. On the one-week relative, guys, you can see the consolidation definitely does continue. The only two positive sectors in the entire market continue to be real estate and consumer defensive. Everything is to the downside, led to the most part by technology, right? So unfortunately, guys, a little bit of slump does continue in these markets, and it leads us into our seasonality, right? Here's the seasonality for election years since the 1950s. Now, keep in mind, this is the end of the month of July. You usually have a little bit of consolidation, and supposedly we're supposed to have a nice rally in the early part of August before some further sideways consolidation and some potential further downside. However, the markets have not followed this trajectory very well over the course of the year, right? I would say that we're already right here at the top end of the market. The market's really blasted off all the first 6 months of the year. We may just be entering this consolidation phase right now with potential declines here in maybe the month of August and September leading into the election cycle, which proves to be very uncertain for the markets. Keep an eye on this as well. S&P 500 monthly seasonality. This is just election years and non-election years as a whole. And you can see traditionally August and September are your two most red months of the year before later on, coming back to rally mode in the later stages of October, November, and December. So definitely on the watch for that, guys, and it would potentially lead us into that extended weekly consolidation that we've been talking about on the channel ever since pretty much topping out as of last week, right? So lots to be on the lookout for here, guys, in the next few weeks. But one thing is for sure, be this time would be a very good time to be building a watch list, a shopping list of your favorite companies, because they may just be in significant discounts here in the next maybe 3 to 6 weeks time. So it's time to build a shopping list, build some cash, and wait for the market to come to you. Be very patient, right? So that's pretty much everything for our intro. Now let's dive right into our earnings segment of the video, and we're going to start off with a banger, guys. We're going to start it off with Google reporting earnings after the bell, and unfortunately for Google, guys, well, they were down in the after hours by about 2%, but they really crushed their earnings, guys. Nothing truly bad to say about their earnings report at all. Just a little bit of continued timidness in tech stocks because they have ran so much since the beginning of the year. So let's take a look at their earnings, guys. Beat it on EPS and beat on revenue as well. So double beat for Google. All in all, guys, a very decent quarter. Let's jump into a few of the articles about that fact, right? So moving on, Alphabet meets earnings expectations, but misses on YouTube ad revenue. Now, they did beat in terms of quarter over quarter and year over year, but they came in slightly below the estimate. That's what that headline means. So let's get into it. The company reported ad revenue of $64.5 billion, up from $58 billion last year, showing that Google's advertising business continues to grow after rising inflation and interest rates tightened market budgets in 2022 and 2023. So Google pretty much saying not a problem for us. Now let's take a look at YouTube advertising revenue, 8.66 versus the 8.93 expected. It just came in slightly lower than the anticipated estimate, which is closer to 8.8. Now Google Cloud also with a nice little beat, 10.35 versus 10.2. And traffic acquisition costs, how are they doing in terms of managing costs? They were actually coming in under the expectation. So rising revenues and declining costs. Very, very good, right? It leads to increases in profitability, and Google had one of their most profitable quarters ever this past quarter. Very, very nice. Alphabet's revenue was up 14% year over year, driven by search as well as cloud, which surpassed 10 billion in quarterly revenues and 1 billion in operating profit for the first time. Google Cloud, guys, is always the segment that people watch the most closely because it's the fastest growing segment of the business. It's growing anywhere between 25 and 28% per year. Now, in terms of your cloud leaders, just take a look at this, guys. Amazon definitely in the market leader position right now, followed very closely by Microsoft Azure. Google Cloud, still your up and coming cloud developer right here with only 11% of the market share, but you can see between these three companies, they pretty much own the entire market. So nice to see that even though Google is behind, they are still growing their cloud segment very, very aggressively. Now, here's a snapshot of quarterly revenue growth year over year, and you can see that although these were outlier years, guys, we're really back to pretty much our streamlined growth in the mid-teens that we had prior to the pandemic as well. Now, moving on, our strong performance. Here's what the CEO had to say. Our strong performance this quarter highlights ongoing strength in search and momentum in cloud. We are innovating at every layer of the AI stack. Our long-standing infrastructure leadership and in-house research teams position us well as technology evolves and as we pursue the many opportunities ahead. So, the Google CEO, Sundar Pichai, remaining extremely bullish on the company's positioning for the short, medium, and long term, suffice it to say. Now, let's take a look at some of the financial data from their earnings, guys, and you can see we will reiterate 14% bump in revenue, total revenue year over year in terms of this quarter measured over the 2023 quarter, and that is very, very good, right? Increases in operating margin. This, in my opinion, is the most substantial metric for Google. Are they increasing profitability while scaling up revenues? And the answer is yes. So the company is benefiting from very nice operating leverage. And take a look at your net income, guys. Net income now 28% for the quarter. That is one of their best quarters in recent memory here, guys. Let me move myself over. You can see down here, usually in the past 5 quarters, right? Last quarter was 29.41, but in the past, guys, they've usually always been between 21, 24%, and even on an annualized basis, right? Except for the COVID years, they were really between 21 and 24%. So it's nice to see them line up 2 quarters in a row now in the 28, 29% net profit margin range. Very, very nice for the company. Let's take a look at some of their operating segments right here. So Google Search and Other growing very, very nicely year over year. YouTube Ads, of course, growing nicely year over year. Google Network taking a slight little retracement, guys. What is Google Network? Well, think of all the advertisements that are placed either by third-party providers controlled by Google or on Google's other services, right? Think of ads on the Google Play platform, right, for Android devices, and also ads on Google Maps. So that is what they're talking about when they say Google Network, right? Google subscription platform and devices, that is up very nicely as well. Ties into a little more of their Android marketplace revenues too. They kind of split that one between the two. And then Google Cloud, the big winner here, up a very substantial 29%, guys. So growing excessively healthily. And this, guys, I'm very happy they included this because this is what a lot of people were criticizing the CEO for over the past year, of them ballooning the employee count and not keeping costs under control, and also not keeping share-based compensation under control. So now you can see Google is pretty much reducing their headcount ever so slightly, so trying to keep those costs under control as a whole. All in all, guys, very decent report from Google. We're not going to go through everything, just a few of the highlights, right? So year-over-year revenue expansion, we covered it twice so far, 14%, but how are the costs, right? So costs are also expanding year to date, only up 6.8%. So revenues are expanding twice as fast as the costs, which give them very nice boosts in net income, right? There's your 28.6% figure. And last quarter, as a matter of fact, in 2023, when we measure year year over year was only 23%. So you can see that net increase in profit margins as soon as the CEO over the last 6 to 9 months has really cracked down on costs. And you can see that right here, revenue jumping over 14 and costs only jumping about 6.8%. Very, very strong for them. Now let's jump down to a bit of their free cash flow numbers. So in terms of free cash flow, guys, I'll give you the number right away, 13.4 billion. Now that is a little bit lighter than Google has been performing in the past couple of years, right? So in terms of quarter over quarter, guys, you can see that oftentimes Google does put in 17, 21, 22 billion dollars in free cash flow quarters. But as of the most recent quarters, guys, the last 3 quarters, that is now under, right? Coming in this quarter at about 14. And that is a bit light in terms of Google's recent history. But why is their free cash flow lighter, guys? Well, it's right here. Purchases of property and equipment, aka capital expenditures for their data centers for the AI ramp. You can see that their capital expenditures on property and equipment is up pretty much 2x. This is the quarter. Pretty much starting the quarter ended, right? So you can see that they're up pretty much 2x quarter over quarter from 2023 to now 2x, and year to date as well, 2023 versus 2024, you can see almost up 2x. So that is the reason why their free cash flow is down a little bit. They're spending a lot of money, guys, on AI ramping, right? And then obviously you have repurchase of stock, pretty much totaling around $3.1 billion. So that is very, very nice in terms of the repurchase of the stock. Just a quick reminder, guys, Google still has a ton of money outstanding for stock repurchases, about $65 billion. So all in all, guys, nothing bad to say about the company whatsoever. That's pretty much everything I wanted to show you as a whole on Google. Just a reminder, guys, as well, in terms of streaming, right? We gave the YouTube numbers, but always remember that Google is your leader in terms of streaming platforms, even over and above Netflix. Now, obviously, still a lot of people on broadcast, a lot of people on cable as well. So streaming does not represent 100% of people's attention spans when looking at their screens. But YouTube is the industry leader, followed closely by Netflix. And then thereafter, guys, it's not really close. So it's nice to see YouTube maintaining that leader position. Should be a very strong business for them for years to come and generating significant profits from that platform. Now, in terms of the valuation here, guys, and a little bit of technical analysis on the company, right? So here's a summary of the Q2 2024 results. Gorgeous net margin expansion, continued focus on cost control, 10 billion in cloud revenue for the first time ever, 13 billion in free cash flow, decent, but lots of 2024 capex, still have $65 billion in buybacks coming, which is huge, guys, right? The market cap of Google right now is about 2.26 trillion. So if you divide 65 divided by, let's say, 2260, it's going to be about 3% of their outstanding float. So fairly decent in terms of the amount of buybacks remaining. And this is my one main concern that we heard from the earnings call, guys, okay? So here is the gist of things in terms of AI, obviously because it's on everybody's mind. AI, as voiced by the CEO, has helped reduce costs and improve efficiency. Their products are now getting better and better in terms of being tailored to the consumer. However, the CEO did reiterate this, and analysts asked him this question specifically: has it translated into revenue expansion for you guys? And he said no. Unfortunately, it has not translated to revenue gains, and this is my saying right here, this could put pressure on the valuation in the short term, guys. There's been a ton of money injected into this AI narrative, but so far very few companies actually have increases in revenue to show for that. Yes, they have productivity increases. Yes, they have cost reductions, but they don't yet have that juicy revenue expansion that everybody's been talking about. These companies say that it's going to be coming later in 2025 and 2026, but still, this could put pressure on the short-term valuations. In terms of those valuations right now, with Google at about 180 in the after hours, guys, well, they're growing EPS very, very rapidly, 17% per year, which gives them a 2024 forward P at 180 of about 23.4. Not that high in terms of Google's historical valuations. If we look at the PEG ratio, dividing this PE rate by your 17% EPS growth rate, we get a PEG ratio of 1.37. Quick reminder, anything under 1 is cheap, between 1 and 2 is okay, and anything above 2 starts to be very expensive. Now, at a 1.37, guys, this is very, very good for Google, but considering the fact that we may just have some continued tech weakness, maybe some lapses in the AI narrative, continued semiconductor weakness, continued rotation out of big tech because they've ran so much, if ever Google comes down to the lower 170s, 160s, guys, that would be a juicy sweet spot. Just a reminder, who's in control? Yes, your bears may just continue this daily downtrend into these levels, which may bring down our weekly trend as well. But when we start coming in, guys, to the lower 170s, 165s, that's where we have to be mindful of the higher time frames. Those are where your longer term monthly bulls are going to be sitting for a little bit of a monthly pullback on Google for the continuation of the trend expansion. So if the month of July ends like this and we come into a little bit of pullback into maybe August and September, could be a very nice dip buying opportunity for Google. Quick reminder, whenever Google has a pullback of about 11 to about 13% in a context of a bull market, usually very good. Now from the all-time highs, we're about 5.5, right? So if we were to come down in the mid 160s, that would be your 13% dip and should represent a very decent buying opportunity. So I will be patient for this one, but as a whole, guys, the earnings report was extremely solid. Now let's get into something else that's very, very fun, and we're going to do Tesla. So Tesla, right? Down now in the after hours by about 8%. They actually started off not too bad in the after hours, as a matter of fact, guys. When earnings came out, right after the bell, they were only down for all intents and purposes, about 3-4%. And usually Tesla does move 7-8%. And then once again, when we started the earnings call right around the 5 o'clock mark, that's when things started to unravel, guys. So I figure that since it's not covered in any articles, we're going to go over a few of the points on the earnings call that led to a stock decline. A little bit of the numbers first, guys. They missed on EPS by a wide margin, 15.2%, due to decreases in profitability for a few reasons, which we're going to get into, of course. And they did beat on revenue. This was actually Tesla's best quarterly revenue posted ever. So at least they're doing something right. However, that is pretty much where the bullishness stops. Now let's do a quick recap of the earnings call, and then we're going to get into a few of the articles and a few of the numbers. So on the earnings call, Elon, what they were focusing on, guys, was the record quarterly revenue. However, we still have no 2024 guidance. There was a reluctance to run advertising as well. Elon said, well, it may not be the best for company positioning right now, so they would rather not do it. And I do think that's a mistake on the company's part. There was also no comments whatsoever on the nature of consumer cyclicality, right? When is demand going to start coming back on Tesla? You would think, as one of the leading car manufacturers in the world, that they may have very in-depth statistics as to when the consumer could be coming back into the auto industry. No comments on that whatsoever, and in my opinion, that definitely does not help the stock price. Now, what were they bullish on? Well, very bullish on the 2025 rollout of a cheaper vehicle. $35,000 vehicle is still in the pipeline. Very bullish on the Cybertruck success. And also very bullish on the robotaxi trials that are starting at the midpoint of 2025 to potentially enable the end user, the end consumer, to lend out their own vehicle for robotaxi purposes. The trials should begin next year. Now, number 4, this was a big one for them, energy division outperformance, and we'll take a look at the numbers. And number 5, this is a big one. Elon has now said this for 2 quarters in a row, because obviously the fact that the share price has been, declining a significant part, right? He's been saying this now for 2 earnings calls in a row. Elon says the value of Tesla is autonomy, full self-driving. Everything else is noise, right? So that's Elon saying that. That's not me. That is him directly. He literally said on the call, if you don't believe me, go listen to it. If you don't believe in autonomy, sell the stock. Quote for quote, guys, right? So not a very good call, to say the least, focusing more on the mid to long term rather than addressing our short-term concerns of right now. And in my opinion, that is a mistake from management. Now, moving on, guys, let's take a look at some of the numbers, right? So into Tesla reports disappointing earnings for second quarter as revenue rises only 2%. Now, at least it's rising. So automotive sales dropped for a second straight period. No secret there, guys. Automotive demand as a whole, not just for Tesla, has been down across the world. I keep saying this, it's not a Tesla problem, it's an overall auto industry demand problem, right? So automotive sales dropped 7% to 19.9 billion from 21.27 in the same quarter a year ago. Auto sales included regulatory credits of $890 million, more than triple the figure from last year. And this is important when we're going to get into their numbers here real quick. Now, the company said it recognized record regulatory credit revenues in Q2. If they did not have this, guys, in my humble opinion, this quarter would have been much worse than it currently is. After a rocky first half of the year that saw Tesla cut more than 10% of its workforce, the company reported better than expected deliveries for the second quarter earlier this month. However, deliveries were still down from a year ago for a second straight period. No secret there here, guys. Tesla quarterly revenues by segment. You can see what is the problem with Tesla right now. They are flat. Since the midpoint in 2022, automotive revenues are largely flat. Now, services have had a nice little uptick right there. And especially energy generation and storage, your yellow segment, that has really been a category that's really helped buoy Tesla amidst this automotive flat line or slight decline. You can see this light blue line is actually slightly declining quarter over quarter, right? Now, Tesla remains the top seller of electric vehicles in the US by far, but is losing market share to a growing number of rivals due in part to its aging lineup of sedans and SUVs and the impact of CEO Elon Musk's incendiary and political commentary. Now, in terms of losing market share here, guys, yes, it's true their market share is slightly declining, but I don't really believe that a lot of other manufacturers have that much better of a product. And keep in mind, Tesla is still the only American car manufacturer that's able to manufacture EVs with positive net margins for per vehicle sold. That is very important. Now, revenue in Tesla's energy, meaning every single other OEM that manufactures EV, they do so at a loss. Very stark contrast. Revenue in Tesla's energy generation and storage business, which sells and installs big backup batteries for residential, commercial, and utility use, almost doubled from the same quarter a year ago to just over $3 billion. Very, very bullish, guys. The energy segment is the highlight of this earnings. Let's take a look at some of those earnings as a matter of fact, shall we? So take a look at this, guys. If you think that Tesla is in a bad position in terms of the balance sheet, not true at all, in my humble opinion, guys. $3.9 billion increase in cash and cash investments, up to a total of almost $31 billion in cash reserves. They do not have a balance sheet problem. The balance sheet is still very strong. Now, global EV penetration returned to growth in Q2 and is taking share from ICE vehicles. So a little bit of that cyclical nature of EVs bottoming out. I wouldn't say we're in recovery mode right now, but it's currently bottoming out, and reductions in interest rates later on in this year should help this in the immediate term. Not immediate term, but medium. Think 6 to 9 months down the road, right? Now, overall, our focus remains on company-wide cost reduction. Very important, especially in a cycle of reduced demand, including reducing cost of goods sold per vehicle, growing our traditional hardware business, and accelerating development of our AI-enabled products and services. Here's the kicker. Though timing of robotaxi deployment depends on technological advancements and regulatory approval, we are working vigorously on this opportunity given the outsized potential value. Keep in mind, if you don't believe in autonomy, guys, sell the stock, right? That is Elon's words, not mine once again. So let's take a look right here, guys. You can see total automotive revenues. They are down sequentially year over year by about 7%. However, the net income, guys, right, that is also the main point of today's earnings. I've been saying it coming into these earnings, guys. It's all going to be focusing on the margins, and unfortunately margins are not good. Net margins now down to about 7%, guys, from well above 15%. You can take a look, guys. Q2 2023, they actually had about 12.6. So even from last year, we're down about half, but from the highs of 2022, which were about 15, 16%, we are down more than half right now. This is the major problem for the company, but at least, guys, we generated positive free cash flow on the quarter after bringing in negative the previous quarter. So at least we are returning to positive free cash flow, but as we'll take a look at, guys, a lot of that is from regulatory credits. Now, energy generation and storage revenue, guys, 100% increase year over year. That is what they're calling the 2X in energy generation. Very good for them, right? Now, let's take a look further. So, in terms of Tesla, guys, I don't want to go through the segment per segment because obviously we know that the 3 and Y are outperforming everything else. All you need to understand is that deliveries of our production has been scaled back ever so slightly because demand has been scaled back. You can see that 16% sequential decline right here in Model 3 and Y productivity, and also in terms of deliveries as well. Well, you can see that those are also down about 5% too, right? Not going to talk about the other segments because they represent such a small portion of Tesla. A lot of that is due to the Cybertruck bullishness as well, but Model S and Model X haven't been performing too poorly as a whole. Now, in terms of your ramp up here, guys, of vehicle capacity, you can see still flatlining, right? Flatlining as of 2023. So it just goes to show that the industry as a whole, guys, is in a little bit of cyclical downturn right now. The main positive part is the extreme ramp up here in FSD miles driven. So if your focus is on autonomy, at least you can have confidence in the fact that they are really ramping up their efforts into monitoring FSD, making it better, and really solving that last crucial 1% that they're missing currently right now, right? So looking very decent in terms of FSD. In terms of energy storage, look at this graph, guys. Non-automotive gross profit. Look at this profit brought in by the energy segment. Tremendous category for Tesla. So at least that's helping boost their bottom line performance by a lot, right? So although the company is slightly struggling here, guys, we're not going to go through the rest of the slides right there. The gist list of things I'm going to cover right here, just to get out of this a little bit, right? So in terms of what we have to take a look at, guys, in terms of Tesla, right? My thoughts on Tesla, because I am a long-term Tesla shareholder. Yes, I have trimmed my position a lot since the highs of 2021 and 2022, but I still do have a substantial position in Tesla. Now, keep in mind, this is going to be a full exhaustive view on Tesla as a whole. Now, we are dealing with some short-term negatives. This is true. Tesla EV demand, right? Slowing sales of growth worldwide. This is all OEMs, not a Tesla problem, an overall auto industry problem. USA price cuts, which led to lower margins. This is true. We went from 20% margins to sub 10% margins. Definitely not very good since the peak over here to where we are right now, roughly a 2x cut. China price wars continue over there, increased competition, and stimulated demand in Q2 with 0.99% incentives. They actually financed a lot of vehicles for consumers at 0.99. They took a hit in the margins for doing so, but at least they were able to keep up with deliveries and keep up with production, right? However, the long-term positives, in my opinion, are not to be ignored for this company. Solving FSD, Elon is right. It is a multi-trillion-dollar robotaxi business opportunity, guys. It cannot be ignored. They have the most extensive charging network worldwide, which is very, very good. We can pull up their some of their investor slides, guys. I know I didn't go through a lot of these, but if you want me to pull up the, I think their charging network is in here somewhere. If I can find it real quick, don't want to spend too much time on this. Can I find the charging network? I should have just highlighted it and put a stamp on it, but all you need to know, oh yeah, here we go, right down here. So supercharger stations, that was up 23% year over year, and supercharger connectors also up 24%. Very, very good increases in that productivity as well. So they obviously have the most extensive network. Now, they also have one of the most advanced robotics divisions worldwide. This is true. AI supercomputer play with Dojo and Optimus, not to be ignored. Solar and energy exposure long-term, obviously representing a very good facet for the company this quarter and should continue. One of the 3 worldwide positive free cash flow EV makers. No other company, guys. There's only 3 in the world that can manufacture EVs at a profit. One of them is BYD, the other is Li Auto, and the third one is Tesla. You can see there is no other OEMs that can make EVs at a profit. They have a tremendous amount of brand loyalty, despite the negative comments that you may see online, which are highlighted. Majority of people talking about 85-90% plus of people who have driven and owned Teslas, they like them. Sure, are some of the negative voices a little bit louder than some of the positive voices? Yes, but that is natural, guys. But for a majority part, they do have a decent amount of brand loyalty, and they do have some of the best engineers worldwide. So the long-term positives cannot be ignored. However, the valuation, guys, with EPS growth and revenue growth very, very decently, EPS growth 33% per year. Look at the valuation at 240. The forward PE at 240 is 100. Very high. And the forward EPS growth rate here, or for the forward PEG at 240, considering the 33% EPS gain per year, is still a 3.3, guys. That is just too high. So for a short-term swing trade on Tesla, guys, unfortunately, the momentum right now on the stock is pretty much dead. They really did, they didn't do it any favors by delaying the robotaxi event. That pretty much killed momentum right here. And now with this most recent earnings mishap, most likely the stock will face continuation of declines, especially if the overall market has some of that seasonal weakness too, right? So I would not be surprised if Tesla makes its way back into the lower 220s, maybe even down below at 200. Now, 200 down to about 180, that represents a better valuation for Tesla, and that is where I would consider adding a bit more shares. But up here was not for me, and even right here at about 227, it's not for me, guys. The valuation is just not justified. But as a long-term opportunity, guys, if you're in this stock for the next 5, 10, 15 years for the play on autonomy and robotics, then I don't believe there's any reason to sell the shares just yet, because they continue making progress in those segments, right? So even though the valuation right now is expensive, well, long term, if all of these catalysts come into play right here, especially solving FSD, the valuation now is going to seem pretty cheap. So it really depends whether or not you have a short or long-term view on Tesla, and that is just my opinion on the matter. So moving on here, guys, right? Spend a little bit more time on that one. Apologies. Moving on, let's cover our last earnings for the day. Then we're going to get into some technical analysis, guys. I keep trying to make these earnings reports shorter. I try to tell myself only spend 4 or 5 minutes on them, but there's so many good things to say. I feel that if I would spend only 4 or 5 minutes on the best companies in the world, it might not be fair, right? I can spend 4 or 5 minutes on a tier B class company, but when it comes to Google, Tesla, Visa, things like that, I feel we need to have a little bit more in-depth analysis. So apologies for the length of the video once again, guys. I'm trying my best here. So without spending more time on that, let's take a look at Visa. So Visa in the after hours, guys, down about 3%. And unfortunately, guys, right, another decline for Visa after being consolidating for 3 months. I was hoping for them to put out some good earnings, and they did. It's just that unfortunately the market did not well receive it. It really echoes to American Express earnings last week. American Express earnings, we covered them on the channel last week, right? Earnings for AXP were beautiful, but they were still down 3% after that. Now, Visa, pretty much the same thing. The earnings, almost bulletproof, guys, almost bulletproof. There's really nothing wrong with these earnings whatsoever. In terms of the revenue, slight tiny miss. On $8.9 billion, they missed by 18 million. Tiny little miss in revenue here by about 0.21%, but still a miss. And they did have a slight beat on EPS, right? So moving into the numbers, guys, let's take a look at exactly what happened with Visa. So Visa's profit climbs 9% on growth in consumer card spending, pretty much reiterating the same thing that American Express said last week. They said card membership and card spending is up, and they don't really see a significant slowdown in consumer spending, especially through 2025. So let's take a little bit of a glimpse here at an article. Visa posted a quarterly profit that beat Wall Street predictions as global spending on credit and debit cards increased. Worldwide card spending climbed 4.9% in the quarter compared with a year earlier. In the US, where Visa gets roughly 40% of its revenue, spending advanced 5.1%. That is good for Visa. During the quarter, we expanded our partnerships with many clients around the world and announced several new innovations that will help drive the future of commerce. So all in all, guys, very bullish article. It's such a short article because it's so hard to find anything wrong with this company, right? And unless they present truly groundbreaking things to the positive side, it's also very tough to find, anything positive for Visa as well, right? Unless they have a crazy new partnership or a groundbreaking new product, right? It's just a very, very decent earnings report. Like, just solid, right? Just very, very solid and boring, which is what you want to see in a lot of the best companies in the world, guys. If earnings reports are boring, usually for a company, it is very good, right? So moving on here, guys, taking a look at Visa. We're going to go through this very, very quickly just to show you guys how dominant of a position Visa has, right? So in terms of net revenue bumps, guys, 10% net revenue bump, very, very solid right there. In terms of net revenue, as you can see, 8.9 billion. Look at the net income, guys. Net income, 4.9 billion. And I've told you guys why Visa and MasterCard are some of my favorite companies in the entire market. Look at these profit margins. How can you argue with these profit margins? 53% profit margins. And what does Visa do with these profit margins? Well, I'm glad you asked. They help you. They buy back shares so aggressively. They have nothing else to do with their money, guys, other than buying back shares and supporting the price action of the company, which is why your long-term chart looks something like this. Excessively strong company, guys. This is why one of my favorite companies in the world. They continue posting record profits again. Payments volume up 7%. Cross-border volume 14%. Processed transactions 10%. Does anything look wrong to you guys? Not really anything that much, right? Now, a little bit of slowdown here, May and June, but as a whole, U.S. payments volume growth over the quarter was remaining fairly stable within between the 4 and 5% range. Processed transactions just the same as well. Now, in terms of payment volume growth, U.S. and international, not going to break those down, but all you have to see, guys, is credit, debit, and total are growing year over year, right? So looking very, very strong as a whole. Now, moving on here, guys. So the Q2, that was last quarter. Q3 is their fiscal year, right? So a little bit slower than last quarter, but still very, very, very solid for Visa. No red flags, in my humble opinion. Now, let's move down a little bit further here, guys, and we're going to take a look at one of the slides that I wanted to pull out is free cash flow. So free cash flow, guys, generating in Q3 2024, $4.7 billion in free cash flow, and year to date, about $12 billion. That is really standard, guys. If they continue, they should be able to hit pretty much their usual free cash flow rates, which is the run rate right now of about $19-20 billion per year. Free cash flow just continues to increase every single year, guys. Not a problem for Visa at all. Let me just pull up a chart of their free cash flow, and you will see that right here. So free cash cash flow, you can see quarter over quarter, usually always coming in anywhere between $4 to $6 billion. This quarter was a bit on the lower end, but as I said, guys, the later part of the year should be quite good for them. They should be able to hit roughly that, $15 to $20 billion in free cash flow metric, which is just extremely strong for the company. And in terms of the share buybacks, they've done a number of share buybacks throughout the year, right? So $4.7 billion in share repurchases. Year to date, that's almost $11 billion in share buybacks. And outstanding, they still have about $19 billion of share buybacks, which are authorized. As a whole, fairly decent, guys. This is about 3% of the outstanding float. Once again, such a solid quarter for Visa. Nothing bad to say about the company, right? So, in terms of the valuation for the company, that's pretty much everything I wanted to cover in the earnings slides, guys. There's really nothing else. Everything's just working according to plan, and they just reiterated their guidance, right? They're still growing net revenue, low double digits, which is normal for them, right? They're not growing revenue that substantially, as you can see here, pretty much a 9.5% growth rate for the next couple of years through 2027. So fairly normal for them. A little bit of a consumer slowdown year for them, voiced by Visa and MasterCard. So expect 2025 and 2026 to pick back up. And that's pretty much it, right? Continued expansion in EPS growth, continued expansion in revenue growth. Look at this graph. Gorgeous EPS growth, gorgeous revenue growth, nothing bad for the company whatsoever. So hard to pick anything apart of this earnings report. EPS growth 12% year on the next per year on a next 3-year forward basis. Looking at evaluation, guys, at $258, their after hours earnings price, about a 2.16 peg. Not that bad at all. Visa does command a higher valuation than other companies, such as MasterCard does as well, just because it's so solid, guys. It's so solid, it demands a higher valuation. These numbers are pretty much in line with Visa's history. As a matter of fact, 25.9 on a forward basis is a little bit cheaper than their history. Usually it's sitting about 28.30. So nice to see them a little bit under there. And free cash flow yield as well, 3.63%. Visa, it's very tough to find them over a 4% free cash flow yield. Just as a quick reminder, for a top tier company, guys, that has achieved scale and growth, right? Not a high tech growth name or anything like that. Usually free cash flow yields anywhere between 4 to 5% are a very, very good deal. So for Visa to be at 3.63, that is good. Anything, guys, under 3 starts to be a little bit tight. Closer to 2 is very, very tight. Anywhere at, 3.63 to 5 lets you know that a gorgeous company is at a nice little discount right now and could be a buying opportunity. And I do think the same thing for Visa, guys. Such a great company at a long-term buying opportunity, in my humble opinion, coming into this wide support zone that we've labeled 3, 4, 5 months of consolidation at this point, right? Just looking for the potential recapture of, or the just continuation rather, of the monthly uptrend, and looking like it does want to bounce at this 12 EMA on the monthly chart. Even if we do pull back lower, guys, this entire region is a screaming buy opportunity in my opinion. The chart, trust me, guys, in a few months time when Visa has recovered and are back to the all-time highs, and next year and the year after that, you will be kicking yourself for not picking up such a great company. If you don't like Visa, well, MasterCard pretty much has the exact same chart, right? Tremendous company at decent discounts, and I do maintain that Visa and MasterCard represent some of my favorite buying opportunities in the market currently right now. So that's pretty much everything for Visa. So hopefully all of those earnings were helpful, guys. And let's jump right into our technical analysis right now. And we're going to cover these a little bit quickly because not much has changed since yesterday's video. So yesterday's video, guys, we were talking about the size of the bounce, right? We were talking about the fact that we had a nice bounce underway on the SPY, but that the size of the bounce was not decent enough, right? Only coming up at this point about 40% retracement. And now we got to watch out, guys, because the S&P, let me just take off the extended hours trading right now. So you will see in normal hour trading, we had a nice hourly uptrend. And we were saying this bounce on the daily will continue the entire time that the hourly trend is in the bull's favor. Now, we have lost the hourly trend into the end of the day, unfortunately. So hourly downtrend is underway. So now, unfortunately, guys, we are maybe looking to revisit these lows. It is up to the bulls. The bounce size is not high enough, guys, to be confident in saying that we are going to get a higher low into a new daily uptrend. As a matter of fact, it is quite weak, which leads us to believe the probabilities do favor for a retest of the lows or maybe even a rollover through the lows. If we do get a rollover through the lows, guys, last line of defense here with the daily support is pretty much sitting at 543. If we do come down below there, guys, just remember we're looking for a weekly higher low. Anything above 519, going to be looking for that weekly higher low, potentially coming down. The weekly 12 EMA is right there at 548 as well, and that would represent a decline on the SPY, top to bottom from there, about 5%. Usually when we have these extended corrections, they go anywhere between 5 5 and 7%. Take a look at last August, went all the way down. Last fall went all the way down to about 9%. So if you were to get the full extent of a massive pullback, we could maybe be looking at retesting some of the levels we encountered back in April, but it's so soon, guys. It's very tough to predict the extent of this drawdown. All we can look at is the price action, right? So price action right now favors the bears for the short term, favors the bulls for the medium term, still in control of the weekly. And the monthly, guys, we won't even talk about. No chance of derailing this bull market just yet. If anything, even if we do get extended weekly consolidation, guys, just going to be looking for a monthly higher low for continuation of the uptrend. So all in all, not looking too bad. But as I said, guys, in times of uncertainty, it's a good period of time to raise cash and be patient. Wait for your favorite market, wait for your favorite companies rather to come to you. Moving into QQQ right now. QQQ, daily downtrend underway. We have the lower high pretty much established because we did also lose the hourly uptrend into the end of the day, right? So now lower low, higher low, lower low into the end of the day. So if we continue this hourly downtrend into tomorrow, guys, you should know that the daily bounce is finished. And how high did we get? We did not get high at all. Barely 38% of the move. That is not enough at all. You need to see a 618 move at least to guarantee the bulls a chance of reversing, and we did not get that. So daily downtrend follow through is highly likely. Keep a close eye on the break of this location right here, 472. Break this and we'll be losing our last line of defense on the daily, and then we need to look out to weekly support to be our next line of defense, and that is pretty much 463 down to about 446 where our weekly higher low stands. So in the event of further daily downtrend declines on the QQQs, just expect some extended weekly consolidation. Still have a lot of space though. Anything above 442, going to be looking for a weekly higher low for potential recapture of the uptrend. And you can see here, guys, the extent of the downside in April was about 7%. The extent last fall was about 11%. So based off of that, right, 7% will be the top end of my weekly support range, and 10-11% would be the bottom end of it. So I really do believe this is where the bulls could put a stop to the damage over the course of maybe the months of August and September. If ever we do something like this, right, very, very choppy move down into it, something like this, exactly like we had back here, right? Not necessarily a waterfall drop, maybe just some choppy price action as we get through a little bit of seasonality, a little bit of election cycle fears, and a little bit of rotation out of big tech, right? So that's pretty much everything for QQQ. Moving on to XLF financials right now. XLF kind of curling over just the same, right? So after a tremendous bullish upswing on XLF, got the daily higher low, looking for continuation, but it appears as though the bulls have run into a little bit of a roadblock here. Daily hourly uptrend, keep an eye on the loss of the hourly uptrend, losing it into the end of the day. Hourly downtrend underway. So if we continue this hourly downtrend into tomorrow, your daily bounce is finished, and we may be looking out for the daily downtrend rollover. Is that big of a deal, guys? Not really, in my opinion. Why? Because even though if we get the daily downtrend rollover here after such a nice move, just looking for a little bit of weekly consolidation, so much space, anything above 40.4, looking for the weekly higher low for continuation of the uptrend. Couple levels of support, guys. Previous resistance going to be first line defense, and down here where all of your weekly support or resistance was previously could be acting as support. The 12 EMA on the weeklies right there. So could we maybe see something like this and like that? Probably, guys. That would be the best case scenario for the bulls, in my humble opinion. After a nice 5-6 weeks of rally, might just be a little bit of time to consolidate with the rest of the markets. Moving on here, XLV really reiterating a lot of what we were seeing on SPY and QQQ, right? So gorgeous daily swing to the upside, big pullback, looking for the daily trend continuation, but the bulls running into a little bit of a roadblock right now. Keep an eye on the hourly trend. Now this one is a little bit less clear, so let me label it out for you, right? Hourly downtrend into the close, right? Lower low, higher low, lower low again, hourly downtrend, which means that if we do continue into tomorrow's session just the same, your daily bounce is finished, and we'll be looking at the bulls to protect these lows right here. Now, the size of the bounce right here was fairly juicy, up to about 50%, but it doesn't guarantee, right? We can always have a retest of these lows before moving higher, or at worst, the daily downtrend flush. If ever we get the daily downtrend flush, guys, just understand that we are coming into big support. First line of defense is right there, 147 to about 145. But the gist of the things are on the weekly, guys. This is the time frame we should be focusing on when we are worried about broader market pullbacks. A lot of space on the weekly, anything above 142, looking for that weekly higher low for further trend continuation. This level right here is going to be very challenging for the bears to get through as a whole. And in terms of the monthly, guys, the monthly is looking extremely healthy for continuation of the trend. So if we get a little bit of sideways consolidation here, which is what healthcare usually does when overall the markets drop, healthcare can just consolidate sideways. So that would be best case scenario for the bulls. some extended consolidation before maybe some further trend resumption later on in the year. Moving on to semiconductors right now. So semiconductors also, reiterating a little bit of that sector weakness right now. Daily downtrend, trying to set up for the lower high and maybe the lower low flush. You can see that by the turn on the hourly, same thing as QQQ, right? So we had a nice hourly uptrend leading into yesterday, and then unfortunately today, we almost lost it, toying with the lows. So if we break these lows tomorrow, guys, one thing's for sure, hourly downtrend is in motion, which will mean daily downswing is in motion, and the size of this bounce, guys, was just not good enough at all, right? Size of the bounce was not even 30% of the move, so that favors the bears for some continuation to the downside. Where could we possibly go? Look at this location right here, which is best seen on the weekly. This is a prior level of weekly resistance, should be newfound support for the bulls, and would most likely be an area of continuation to the downside. So keep a close eye on this area coming up right there. Could be a likely area where we pull back into. Overall though, guys, we are expecting, as we've been saying, with AI concerns, semiconductor valuation concerns, right, may just be looking for the monthly higher lows as well, which is why I'm really targeting this area on the monthly, right? Could just be due time for a little bit of a pullback. Not too bad of a thing in my humble opinion. This sector has run a ton, so to see it consolidate just as it did in April and even last fall, just maybe a half month of July and then maybe one full month in August, that should really be enough for the bulls to gather some more support down here and maybe continue this rally into the end of the year. Still very bullish on a lot of semiconductor industries or names out there. It's just the overall industry right now is going through a little bit of extended pullback mode. Moving on to the Russell really doing its best to outperform everything today, looking relatively healthy if I do say so myself. So daily uptrend was never in question, right? Gorgeous daily uptrend, daily higher lows are set. We're just looking for that continuation of the uptrend. However, with overall broad market weakness, guys, I would be very, very surprised if the bulls can get through this previous all-time high area of resistance, which pretty much starts at 230 or 228 all the way up to about 230, right? I would be very, very surprised. So it's very possible we encounter a little bit more resistance here and then start rolling over with the broader markets if consolidation does continue. That being said, the bulls are in full control right now, and the key will be to monitor the hourly time frame. Lose this hourly time frame into tomorrow, you will know that your lower high is set. The best chance the bulls have is sideways consolidation. If you lose this, then you set up for weekly consolidation right away. At least you have tons of space though. Anything above 198, going to be looking for that weekly higher low for further trend continuation. So if the Russell pulls back with the rest of the market, think August and September maybe, and comes down into this area to retest, we have a nice breakout. If we retest this range down here, 210 all the way down to about 205, this little pocket right here could be a nice little location to make a swing trade attempt for that trend continuation later on in the year. Moving on to the Dow Jones right now. Dow Jones also down about 0.14%, right? So got to be careful on the Dow Jones because they are in a daily uptrend, looking for the daily higher lows and looking for that trend continuation. But keep an eye, guys. The daily higher lows were set because we did regain the hourly time frame, but it's very, very weak. If we lose this into tomorrow and crack these lows, hourly downtrend is started, and unfortunately, daily downtrend is started on the Dow Jones. If we do get a daily downtrend, at least we have a lot of support below us. 39.9 all the way down to about 39.500, huge area, and you see it best on the weekly, right? So if we do lose this daily into a daily downtrend, that is just going to be looking for weekly consolidation, and anything at this point above 38,000 just going to be looking for a weekly higher low for further trend continuation. Dow Jones is more of a defensive sector or defensive index as a whole, so I'd not be surprised if this one holds up a little bit better than the SPY or even the QQQs and maybe stops a lot of the bleeding in that lower 39,500 range, which we kind of labeled on the chart, looking for the weekly higher low for continuation of the weekly uptrend. So all in all, the indexes are not looking too bad, but we have to be mindful of overall weekly consolidation, which could be coming on the near-term horizon. Moving into our big tech names, shall we? So we're going to go through these a little bit quickly because I want to keep this video under an hour. So Apple, not looking too bad, 0.47% to the upside. Their earnings are pretty much next Thursday. So not too much to say about them, guys, because they don't have that many sessions before earnings. All you need to understand is we are on the verge of a daily downtrend. Crack these lows, 222. Daily downtrend on Apple is underway. We have not had a daily downtrend on Apple since all the way back here in the month of April. So that would be notable to us. So be on the close watch. First line of defense support level is this one right here, 218. But if ever we embark, oops, my chair came undone from me. So if ever we have a little bit of a slowdown on Apple, similar to the rest of big tech, we will just be looking for an eventual weekly lower high, right? Gorgeous weekly uptrend on Apple, looking for the weekly higher low, excuse me. Anything above 206, going to be looking for that weekly higher low for the potential weekly trend continuation. But keep a close eye on earnings, guys. If Apple doesn't give very good earnings, there's a very good possibility that we even start retesting lower and just consolidate with the rest of the tech industry. We will take this one day at a time, but I've said on the channel many times, my desired location to be playing Apple right now is 205 all the way down to about 200, where the valuation becomes a bit more manageable, looking for a monthly higher low for continuation of the trend. Right now at 214, guys, right? Even at 214, we're at 224 now. Even at 214, valuation at 3.08, too high on the peg for me. So I will probably be waiting for earnings to play Apple. Now, moving on to AMD right now. So AMD also very weak bounce today. We were watching on this, right, guys? Very deep engulfing move by the bears, and unfortunately breaching below our area of support, this huge area of market congestion, prior support for the markets as well. Unfortunately, that now has to be used as resistance, and you can see the bulls have tried to pull into it now for 2 days in a row and are just getting rejected. So with such a brutal move to the downside, guys, we were expecting somewhat of a nice daily bounce. You can see the extent of that daily bounce. It lasted for pretty much 1 day, and now we are in jeopardy of losing the hourly uptrend. Keep an eye on this level right here, guys. We're about to lose it, right? 153.69. Lose that tomorrow. Hourly trend is lost. And with such a weak bounce, this is barely, guys, a 10% bounce, right? Barely bouncing at all. Probably retesting the lows and breaching below the lows. And if we do, guys, the next area of likely support for AMD as it consolidates with the rest of the market is down here. 142 to about 130 is going to be the expectation. AMD with earnings next Tuesday. So going to be looking a lot at their earnings, guys, and see, can they justify the prices at these current levels? The prices aren't that bad right now. At 160, they're about a 1.31 peg, but still a lot of emphasis is going to be on this EPS growth. Can they get it done? Just a quick reminder, guys, not going to spend too much time on this. Quick reminder, though, their blowout years is going to be 2025 and 2026, even on revenue as well. 2025, 2026, blowout years in revenue expansion, because that is when their data centers will be ramped up. So this one can definitely consolidate further, but the next area that I start wanting to play it at with possible consolidation in overall markets, guys, I'm going to be very conservative on this one. Going to be looking 140s down to about 130s for the next line of positioning. Very unfortunate fall off by AMD, but what can you do? The entire sector is in consolidation mode. Moving on to Amazon right now. So Amazon up 2.11%. They were actually up over 3.5% today, but started pulling back. So Amazon daily downtrend underway, probably establishing the lower high today. And we were watching out for this lower high, guys. Prior resistance, which was newfound support, now going to be resistance, and all the moving averages were right there as well. So getting rejected, very possibly that we're going to end up with some daily lower lows in place right now, right? So the size of the bounce, guys, was a decent size bounce, about 50%, but not your 618 or better, which gives the bulls the best chance, right? And if we would have closed up here, it would have been good, but already, guys, you can see, yes, we do have control of the hourly, but if we are unable to push this hourly trend further and roll over into an hourly downtrend into tomorrow, you can sufficiently say your daily upswing is done, and we're looking to revisit these lows at the 180 mark, potentially even lower if we start flushing. If we start flushing, keep in mind, I've always said that on Amazon, guys, my preferred location to be buying this one, 177 down to 166. I think it is literally free money in this location right here. Anytime Amazon has a pullback in the context of a bull market, anytime it has a pullback of between 11 to 17%, it's never been a bad opportunity to buy. Look here at what happened in April. Down 10% was a great buying opportunity. Look over here back last August, right? Down about 15%. Always a great opportunity to be buying Google. And you can go back to any bullish cycle in the markets whatsoever. Dip right here, 15, 16%. I mean, for Amazon, great buying opportunity for the company. This obviously was 2018 interest rate cycle collapse for the company pretty much, but you get the gist of things, right? We're in a normal market environment right now. Usually it's a good buying opportunity for Amazon when you find it at anywhere between a 10 to 15% discount. So right now, being at a discount of almost 8, 9% at the lows, looking very solid. If we come down to this level right here, I think it's a no-brainer opportunity. The 200 EMA is sitting right there, and the mid 160s as well. So we'll see closely what they have to say for earnings next Tuesday, or rather, yes, sorry, next Thursday rather. So that'll be in the cards, but I will be looking to play Amazon aggressively in the low 170s to high 160s if ever we get down there. Moving into Google right now. So Google also not looking too bad on the day. However, with their earnings, right, we have to be mindful of what happened after their earnings results. Let me just put on the after hours once again. So in the extended hours right now, where are we sitting? So 179.60 to the downside. So keep an eye, guys. We will be looking to revisit this 179. And since we're breaking it down here, 179, 178, daily downtrend on Google simply continues at this point, which leads us into further weekly consolidation. The weekly higher lows are right here at about 171, so still a little bit of space left for the bulls to try and turn this around, but entering a big support zone right here, pretty much where we are right now, 179 down to 171. So this could be a decent location to initially start some dollar cost averages on Google, as if we start testing that, that'll be pretty much 8 all the way down to 11% declines. Same thing as Amazon, guys. Usually when Google has anywhere between 8 to 13% declines, it's usually a decent buying opportunity for the company. And if ever we go even more than that, guys, just understand who's in control here. Monthly bulls are in full control, looking for the monthly higher lows for continuation of the monthly uptrend. So Google in the mid 170s, great location for a first dollar cost average. And then if things really start ramping to the downside, let's say Google goes down 13, 16%, the mid 160s down to 160, extremely juicy buying opportunity. So I would go light here. And if we ever visit these levels down here, that is where I'm going to go a lot heavier. Now, looking on to Meta, give me a quick second. Haven't drank coffee all video. That's very surprising for me. Moving on to Meta. Meta not with that bad performance today. Let's see what they did in the after hours with Google earnings. So also dropping in the after hours because of, Google's advertising revenue was good, but it wasn't outstanding outperform, right? So Google getting Meta getting unfortunately a little bit hit by that down in the after hours now. Let's take a look. They're down in the after hours about 1.5%. So not too much damage there. So they also have earnings coming up next Wednesday, going to be a very big week for them. I would not be surprised, however, if this daily downtrend starts continuing, right? Now, contrary to the rest of big tech, Meta put in a very nice bounce. They actually put in almost a 70% bounce, right? So the bulls have a chance right here at being able to set a higher low into a new daily uptrend. But with so few sessions left before earnings and potential continuation of tech weakness, I would not be surprised, guys, if we start revisiting the lower ends of this channel. Still decent support though, 481 all the way down to about 456. And if for ever which reason, I'll keep this on the table, guys, if for ever it's reason, if we flush this level next week after earnings, guys, and we come back down 440, 420, these levels right here, I'm going to be going extremely heavy on Meta. So these locations right here could be a decent location for a little bit of a nibble, little dollar cost average nibble on the company. But if we break down 440, 425, I'm going to be going excessively heavy on Meta, guys. That would be top to bottom decline of roughly 20%. And usually when Meta has 20% declines in the context of overall bull markets, take a look right here. This was last October, 13%, great buying opportunity. This is pretty much the mishap they had on April earnings, right? 20% decline, great buying opportunity. So if we come down there, I'm already interested in Meta here, but if we come down here next week, I'll definitely be adding a whole lot more. Now, moving on to Microsoft. Moving on to Microsoft performing better than the rest today, up about 0.43%, but still in the context of this daily downtrend, right? Lower high is being set. Keep a very close eye on the hourly trend. If for ever it's reason we flush these lows on the hourly, tomorrow, going to be looking for the potential resumption of that daily downtrend, right? So going to be up to the bulls to save this and reset the daily uptrend, but Microsoft has earnings next Tuesday as well. So not too long for them either, right? So if ever we do continue this daily downtrend here, guys, just be mindful, weekly consolidation will be continuing at that point, and we are entering a big level of support right now. 436 down to about 424 is going to be the mark. The weekly higher low is way lower, 404. So tons of space for the bulls to set up for that weekly higher low and move a bit higher. Usually Microsoft doesn't move very volatile in a very volatile fashion after earnings. Microsoft now top to bottom decline about 7%. If we go to the extent of that, 10%, usually a good opportunity to buy Microsoft. Look at this one right here, down about 9%. Good buying opportunity. Look at last August, if we take it, or last October, if we take it from the midpoint of the highs right there, down about 11%, usually a good point in time to be buying Microsoft. Such a solid company, more of a defensive tech name. No red flags for the business whatsoever. So I will be looking for some buying opportunities on Microsoft, but as of now, consolidating with the rest of the market. Moving into Netflix right now. Netflix too, still in big consolidation mode for the company, right? Very choppy price action in the last 2 weeks of trade. Very unclear in terms of which direction it wants to take. So we have to take into consideration, guys, the levels This one right here above us, 656, acting as previous resistance there. And now the area below us, these guys right here as well, right? 625. We're really trapped in a very, very tight range of trading. Extends, I assume you can argue that it extends all the way to the downside here. This is the large area of support for Netflix, right? 635 down to about 605. Going to be crucial for the bulls to maintain this. So if daily downtrend continues with the rest of the market, guys, we need to see the bulls hold up this level right here, because if not, they would be sacrificing the weekly uptrend, right? It would be a loss of the weekly uptrend, and then Netflix has to do a leaps and bounds to try and recapture that. So all in all, Netflix not looking too bad, but we have to be mindful of these lower levels at around 605. One thing is for sure, guys, if we come down, lose these levels, even losing 605, and start retesting the 570s, 550s over the next maybe 3-4 weeks, just going to be looking for monthly higher lows for continuation of the monthly uptrend eventually. So I maintain, guys, anything below 600, in my humble opinion, is a long-term buying opportunity for a great company. They reported earnings and they completely killed it. Moving on to NVIDIA. NVIDIA down about 0.77%, and NVIDIA got to be careful about this one, guys, right? Daily downtrend, setting up the daily lower high, and maybe on to lower low confirmation. Going to be keeping a close watch on this. We had the hourly uptrend, losing the hourly uptrend now. We'll see how this one opens tomorrow, but in my humble opinion, guys, we are going to be looking maybe for the retest of these lows around 117. And if ever we start losing these intra-week or even maybe beyond next week, have to be mindful that the weekly downtrend is on the table for NVIDIA. NVIDIA has not had a weekly downtrend since last year in the fall. So if ever we continue this weekly decline on NVIDIA, a level that I'll be closely watching is 105 down to 100. We're getting a bit close down below here, right? 105 down to 100. Max pain, in my opinion, is about 95, right? Keep in mind that it's just looking at the longer term timeframes. Monthly uptrend, just looking for a monthly higher low for the continuation of the monthly uptrend. That's why I say these candles right here on the monthly, right? This is pretty much your 105 down to about 95 area. That is going to be the widely contested area on NVIDIA if ever we cannot hold these levels and the markets consolidate and really have a significant downturn in the next couple of weeks of trading as we enter seasonality, continued semiconductor weakness potentially, right? A lot of things on the table. I'm not saying it's gonna happen, but if it does happen, we need to be prepared. And I am saying where I'm gonna be going shopping for this company. Now, moving on to Tesla. We already covered Tesla's price action earlier, so we'll just do a quick little recap right here. So obviously now losing the daily trend, right? We're sitting at about 229, which is this circle right here. So just put this on your chart, right? So sitting at 229, daily downtrend is necessarily underway, which means we're in for full weekly consolidation. Lucky enough for us, a lot of space. 168 is the most recent weekly higher low, and we're coming into our big area of support, guys, right? 230 all the way down to 200, such a massive level, all the way back here in 2021. Again, support, congestion, resistance for the market, support, resistance. So 230 to 200 is such a hotly contested area, and it culminates with our moving averages sitting below us, right? But one thing's for sure, if we take back way too much of this move, guys, do not expect to see the V-shape. If anything, at best, we just get a very tight range of consolidation as Tesla's price action works itself out. So in my humble opinion, guys, I'm not really going to touch Tesla right now. I still think it's too volatile, and we don't really have good guidance for the entire industry right now. So as a whole, the only time I'm going to be interested in playing Tesla, maybe for some short puts, is I'll be playing them so far below the current price. So if the current price to start a week is 220, I'm going to be looking at the 195s, 200s, always going 10% below the current price, guys. I want to buy Tesla once again under the 200s. I cannot touch it up here after today's earnings, guys. I just can't do it. The valuation is just not justified, and they did not give me any indication that the short-term business has hit its cyclical bottom yet, right? They just haven't given me that confirmation. That is what I'm really looking for to be, to try and pick a bottom on Tesla, to be quite frank. Long-term investment, I still have all of my shares, but for short-term price action swing trading, I just do not trust this one just yet. The momentum really got crushed after they killed the robo-taxi event and delayed it 2 months. Moving on to Palantir right now. So Palantir also, Palantir, to be quite honest with you guys, of this entire list, Palantir has to be the one that's been holding up the best, right? Where are they struggling right now? At a completely natural zone. They're struggling between the $28 and $29 level, which proved to them to be a big problem for about a year's worth of time, 2020 and 2021. So no secret that it's turning up to be a problem for them right now. So that being said, if ever Palantir does fall off right now, Gorgeous daily uptrend, nothing to say, getting very, very tight, however. So the daily higher lows are very close, 27.58. If we lose those, we're definitely going into daily downtrend consolidation. Just keep an eye on the 12 EMA here, guys, right? 12 EMA is your guide. Lose that with the higher lows, definitely daily downtrend commencing, and just looking for a little bit of a weekly pullback. But so far, no sign of that, guys. The bulls are in control. It's just we're battling with that big resistance area, right? So if ever we get renewed Palantir weakness with the overall market, because the company is doing fine, just expect a weekly higher low. Anything above 20.4, going to be looking for a weekly higher low, and 26.25 should be the likely area of pullback. Decent prior resistance right here should be newfound support, and the 12 EMA sitting right there should be a first line of defense for your weekly bulls for potential trend continuation. This is where I'm going to make a first dollar cost average on the stock. I'm going to be patient with this one, but this is probably going to be one of my favorite dip buying opportunities if it does present itself to us. So that is pretty much everything for today's video, guys. I apologize for the length, but once again, we had to cover 3 of the most important stocks in the game for their earnings. So in terms of tomorrow, what we're going to do on earnings, tomorrow we're probably going to be covering Chipotle and probably UPS and Coca-Cola to stick with our thematic consumer stocks, right? So Chipotle, UPS, and Coca-Cola will be on deck for tomorrow. If I have the time, I'll try to include another one, maybe Enphase or something like that, but that'll pretty much be on the topic for tomorrow. So hopefully you guys enjoyed today's video. I wish I could give you more. I wish I could give you swing trades and all that, but the swing trades are all the same. Just go back and see any one of my previous 4 or 5 videos, even the one from Sunday. All the swing trades are pretty much the exact same as I've been having, right? Maybe just some renewed interest right now in UPS stock because it got so heavily hit. So UPS, I'm really starting to get interested in this one at the lower 125 region. Such a gorgeous prior resistance level for the stock for a long time. So coming down into here, guys, legacy company at, 3-year price discount ranges, almost 4-year price discount ranges. Can't really argue with that to make a little bit of an attempt at a swing trade after, in my opinion, which is going to be their last of the worst, the last of the worst earnings cycle for them. And that's exactly what they said on the call as well. But we'll tackle this one more tomorrow in detail. So hopefully you guys appreciated today's video. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing also if you're new. We do these videos every Monday to Friday after the close. And also, if you have any questions whatsoever, guys, always feel free to leave them down below in the comments. Anything you want, stocks, technical analysis, options play, macro discussion, anything you want, leave it down below and we can get into it, guys. Usually I always reply to you within the first 24 hours. So take care, guys. See you tomorrow after the close, and peace.